I'm Joanna Simpson here at Risk Minds International in London. Joining me now is Matteo Coppola, Global Practice Leader for Risk and Compliance at BCG. Thank you very much for joining
Thank you.
me. And what's been your experience at Risk Minds International so far? What are you looking forward to?
It's a fantastic experience. Almost 1,000 people around, a lot of energy, a lot of innovation. Actually, tomorrow I have a panel. I will start talking about what excites people in risk management. There's so much innovation, so much work going around, and I think it's fantastic. There's a lot of good content. The right topics are actually covered, be it climate risk, cyber risk, artificial intelligence. There's so much going on in the industry, so I think it's a fantastic experience so far.
And you mentioned the panel there. The one you're moderating is entitled Banking Turmoil Over the Past Year, What Went Wrong and the Way Forward. So what's your perspective on what happened in March?
It's an interesting question, but looking back at what happened in March, it's been a failure of risk management, right? So a bit different between what happened in US and in Switzerland, let's say. In US, there was a fundamental issue with the balance sheet and the business model of a bank. But clearly there's been a failure from a risk culture perspective. People did not basically manage underlying balance sheet risk that was there. The second, with Credit Suisse, of course, less a balance sheet issue, but there's been a series of scandals and issues which generated reputational and the credibility and trust problem, which then triggered, of course, the failure when obviously a major, actually the biggest shareholder decided to basically stop investing. That was actually a big problem. It tells you that at the end of the day, beyond capital and balance sheet, trust is an issue for banking, and it's what we should focus, and that's obviously connected with risk.
And you mentioned risk there. On the issue of risk culture, have our supervisors been too focused on rules, on capital and on hard metrics? And do you think we need to go beyond this?
Yeah, no, I have to say that of course there is a range of approaches and that we've seen with different supervisors and regulators. So we cannot put all of them in the same field. And by the way, after the financial crisis in the last 15 years, increasing also on the hard side, on capital, on liquidity, on our metrics has been actually beneficial. Think of what would have happened, even in Europe in March. In a situation where balance sheets were not strong, would not have been as strong as they are today in Europe. Having said that, capital is not enough. It's necessary, but not it's necessary, but not sufficient condition to basically protect the bank. Risk culture is important. You need to really, in modern banking, you need to fully embed, risk management with decision making. You need to have the right culture. You need to be able to basically focus on that. And I think, that's probably, we're going to see a lot of focus on governance, risk culture, even more than what we've seen in the past.
And looking more broadly, not just at the issue of the recent banking crisis, but also at what's happening in the world and the real implications on risk management in banking. We're in a permanent state of crisis in the last few years. How can a bank be ready to react to these situations?
So, right, I'm stating the obvious by saying that the last 3-4 years, we've seen COVID, we've seen the war in Ukraine, we've seen now Israel, the conflict in the Middle East, the China issue. So this, of course, has impacted banking. I have to say that in some way, I don't see in general, risk appetite of banks that change dramatically because of that. But the problem is exactly what you said. There is a permanent state of crisis, which means that basically the speed of change and issues that you see is actually repeating and is actually quite fast. So we are going to see, models, agile models, or ability of banks to react more quick in a much faster way to these changes will actually make a difference. In the market. So we have to probably expect a much more agile and fast and reactive approach to risk. Of course, technology helps. Artificial intelligence, data will help. But we need to move away from a slow pace reaction of the past and be much faster in the future.
Crises aren't purely financial. Climate, for instance, is another issue where financial institutions are struggling to measure something that has a limited history. Have we been too focused on transition rather than on real physical risk underlying assets? And are we going to see shifts in risk management in financial institutions?
So you're touching an important point. Climate change is at the end of the day probably the biggest risk that we'll face in the world in the next 10, 20, 30 years, right? So the first wave of work in banking, and of course, banking is obviously exposed, but is also a conduit of finance, so it obviously plays an important role for the transition, of course, in the world. Now, you're right. There's been more focus in transition in the past, but now, I see banks emerging new dimensions like physical risk and nature, of course. We're a bit behind, but these are two elements and two types of risks that are actually becoming more and more important. If you think about physical risk, potentially, the impact that you have on physical risk is actually even in the shorter term rather than transition. And some banks is maybe more localized, but it's actually something that some counterparts, some specific sectors, some geographies are quite exposed. So now banks are focusing on actually measuring it and checking the materiality of the three of these risks, and of course also very important will be even more the impact on their business models. And I think there is also regulators are looking at it, and banks are actually focusing and putting it as a priority in their plans.
And you touched upon it earlier, but regarding AI and Gen AI, will Gen AI help in solving many of our problems?
So yeah, on one side, from a risk management perspective, Gen AI will be a big enabler of risk management. So I've seen it already applied. It's still in the making. We're in the early days of this, I would say, revolution in some way. There are fantastic use cases in risk management, be it reporting, forecasting, use cases that have to do with scenario analysis, with regulatory, analysis as well, document synthesis, summaries, and so on and so forth. So definitely will help a lot. We need to be really, really, also cautious on the risk side of it. So leveraging artificial intelligence and leveraging Gen AI brings also in a bank, like in any firm, a set of risks, because there is bias, because there is risk of the type of decisions that you are making, because the data protection issues, because there is technology issues, and so on and so forth. So, from a risk management perspective, it's a big potential support to risk management. But on the other side, it's also a risk to be managed. And of course, chief risk officers and risk practitioners will play a big role in this.
Lots of things to navigate. Matteo Coppola, thank you very much for your time.
Thank you.